Let's talk about why today sucked. If you're a fellow degenerate and you like to play in the world's largest casino, aka the old stock market, there's a very good chance that when you woke up this morning and you saw what was going on the pre-market session, you were excited. You probably had a little bit of a green tint in your eyes because it seemed as if the bull camp was once again going to dominate. Unfortunately, when you fast forward to the end of the day, you realize that the train went off the tracks, and now you're probably thinking, what in the world happened? In this video, that's what we're going to be getting into. I want to get into the news of why everything looked so good at the start of the day, and then by the end of the day, it looked completely opposite. But very quickly before we get to all of that, if you enjoyed these type of market breakdown videos, don't forget to like, subscribe, share it with a friend. It's always fun to grow the Goonie trading community. And with that being said, let's rock. By the time the closing bell went dingity ding ding ding, there was a little bit of blood in the water. Dow drops 400 points on earnings, inflation woes, and Nvidia lifts Nasdaq to record close. I know that's a little bit dismal, but please understand when we started the day off, things were amazing. And I don't just mean that to say it, I mean literally, we'd hit a new all-time high. We started off the day by notching a record, and then all of a sudden, there was quite a bit of profit taking. I mean, look at this. This is the intraday session. Pretty much got going, like I said, at new record highs for the SPY, for the Qs, and then we just puked. Yes, I'm going to be getting into what's going on with Nvidia. That's a big, important part of the story. But even Bitcoin, we're going from 118-ish all the way down to 116. Man, lots of profit taking, lots of bears, lots of shorts. What turned the story? Well, it kind of starts here with the fact that part of the market was really good. The tech sector, really good. The rest of it, really, really bad. And actually, I want to get into how horrible the energy sector looked. That's XLE. And really the financial sector also getting absolutely destroyed. We'll be getting into that in a second. If you look at healthcare, like every sector but tech had a really rough day. So let's start off with why tech had such a good day. Well, late last night, it was announced that the semiconductors have good reason to rip once again. Nvidia says it will resume H20 AI chip sale to China soon following US government assurances, but not just Nvidia. AMD to resume MI308 AI chip exports to China, and this helped the entire semiconductor sphere. I'm talking about Nvidia, AMD, Avago, ASML, Micron, Qualcomm, anything related to AI and semiconductors because of this announcement was absolutely ripping. So that was late last night and it carried into early this morning. From there, we got some additional news. 8:30 a.m., we got the CPI report, the Consumer Price Index report. It wasn't amazingly good, but it also wasn't bad. So the market's like, hey, we'll take it in stride and keep pushing this higher. But what you might need to know is that the core CPI month over month came in 1/10 lighter than expected, lower than expected inflation. That's a good thing. And then also the core year over year, 1/10 lighter than expected, but the headline was a little bit higher. So that's what I'm saying is like more things were better than expected, but it wasn't a perfect picture. But regardless, the market took it in stride. Roughly around that exact same time is where we got a little bit of not the best news. We had some earnings and we started off with the tech sector. JP Morgan, Citi, Wells Fargo, BlackRock, and especially BlackRock got rocked. But what you need to know is really by just looking at XLF, which is the financial subsector of the S&P 500, you can tell from pre-market to the end of the day, people not so stoked about what they had to say in their earnings. And that's exactly why the bottom left here, excluding Citi, was all deeply, deeply red. So at that point, tech's looking good, financials aren't looking so good, but they kind of boo each other out. And that's why for a lot of the day, midday, we're just kind of going sideways, not the most going on. And then around 1 p.m., the Wall Street Journal did us dirty, put a dagger in our zero DTE calls, and this is where things started to fall apart. Canada PM Carney signals US tariffs may be here to stay. It is the first time the Canadian Prime Minister has raised the possibility that US tariffs may remain in place. When the bots read this news and they had that reaction right around 1 p.m., well, surprise, surprise, that's exactly when things started to dump. And we had a bit of recovery, but it didn't last long. And then it really, really started to dump. And of course, when it rains, it pours. Shout out to public.com for sponsoring this portion of the video. Now, if you haven't already, I highly suggest that you check out Public because it's my favorite place to trade options. Public helps you make more money or lose less on all of your option trades with their options rebate. When you buy or sell a contract, you get a rebate, which means you actually pay less and in reality, make more than you would on other platforms. You can receive a rebate between 6 and 18 cents depending on your current and prior month's options trading volume. This means that Public is the most cost-effective way to trade options, which is why I love it because it allows me to focus on actually trading rather than the headache that is trading fees. Now, beyond rebates, Public.com offers you an entire suite of tools. They have a comprehensive strategy builder to plan single or even multi-leg strategies. They have interactive P&L charts to help visualize the outcome of trades, and Public even has advanced charting with hundreds of built-in technical analysis indicators. With all these offerings, no commission fees, and no per contract fees, I'm confident that you'll love Public.com as much as I do. So don't forget to check them out by going to public.com/Matt Kohrs, or you can click on the link in the description of the video. Thanks again to Public for partnering with us, the Goonie community. We got an update from the President of the United States, Donald J. Trump himself, and you can read this if you want. It's on his Truth Social, but what you need to know is there are more tariffs specifically on Indonesia. Indonesia will pay the US a 19% tariff on all goods they export to us. There you go. The trade war is here to stay. As much as many of us thought, myself included, this whole taco trade, new all-time highs, we're going to keep going. Well, apparently that was very short-lived. And then from there, especially if you're watching the crypto sector, unfortunately things got even worse. Bitcoin yesterday hitting an all-time high of 123,000, and now we're down to 116. So obviously a clear pullback. And part of the reason this sell-off accelerated was not so good news related to politics. Trump-backed crypto regulation bills failed to clear key hurdle in Congress. So all that together is the TLDR of why the equities, options, futures, and even the crypto market was an absolute mess today. The silver lining was, yes, the semiconductor news from last night that managed to hold on to today. But as you can see, even in post-market trading, as I am filming this right now, the selling is continuing. So that's what's going on. But there also is a pretty good chance that you might be watching this of, okay, Wayne Gretzky, we don't care where the puck's been, we care where it's going. And this is exactly what you got to pay attention to. Tomorrow morning, there's two very important things happening. 8:30 a.m., an hour before the market opens, we're going to get the producer price index. That is the measure of inflation for instead of today's consumers, but obviously tomorrow we're going to hear about the producers. Pay attention to that. But the other very important thing you have to pay attention to that is not on this list is volatility expiration, VIX. Volatility is expiring tomorrow. It does not expire on Friday with the equities option. So volatility is expiring tomorrow. There are currently very, very big bets on that. So when that really happens at market open, there can definitely be a little bit of extra craziness. So please not only pay attention to the producer price index, but please, please, please pay attention and expect larger ranges because of VIX expiration. You should also know that on Thursday, we're going to be getting core retail sales and all that good stuff before the market opens. Then on Friday, July 18th, that's when we're going to have equities options expiration. So basically between now and the end of the week, obviously I have no crystal ball. I can't promise you up or down. If I could, I would tell you. But what I can tell you is look for volatility to expand, as in look for the ranges to expand, because we have more things that are going to be very impactful on the market. And also, please don't forget that in any moment, we could get a headline that sends things sky high, or I guess what, floor low, as we saw today. So please be prepared. Obviously, I would love to get your thoughts and opinions. If you think I'm right, wrong, indifferent, let me know in a comment below. Obviously, also let me know if you have any questions. I'll get back to absolutely all of you. That's what I have for you right now. I'll catch you in the next one. I appreciate the good vibes.